Hi, this is Tim Bryan from Bryan's Business Umbrella, a national virtual business advisory firm helping our clients find valuable strategic solutions for their unique needs via back office platforms, including accounting, payroll, controllership, tax planning, tax preparation, and bookkeeping, as well as various other value-added menu options such as strategic pricing. Today's topic in episode number 5 of my podcast, No Value-Added Business Advisory. We're going to talk about my favorite accounting subject, which is opportunity costs. And that is, opportunity costs by definition is simply the loss of potential gain from alternatives that could have been selected when a different alternative is chosen. So it's the value of the next best alternative or option. And of course, it can be measured in money, but also time and or satisfaction. And it's a simple ratio, but it's has a profound effect on your business decisions, or should. And it's the ratio of what was sacrificed to what was gained. So now I'm going to wrap it up into my very first podcast episode in regards to time being our most valuable resource. And the second episode, in which actually we went over both, in which I showed that accounting should be outsourced, especially if you're not familiar with accounting and are just going based on the fact that QuickBooks and similar accounting packages give you artificial intelligence, and the fact that if you are not categorizing all your transactions properly, it's a waste of your time and money. And that's why you should have an expert do that, and the payroll and the taxes, to be honest with you. Now we have, so you have your revenue, and I'm going to use that as our example, by the way. So let's say if you had contracted with me, we're going to say that's $1,000 a month. Now in that time that you're doing that, you are working on bookkeeping and non-core items that don't make you any money whatsoever, and it's costing you time that you cannot be out prospecting. Now, if you were out prospecting in that time, you could have got a project, and depending on your field and your industry, we'll say the average project for contractors might be $20,000. So in that time, you could have had a $20,000 project, plus the referrals that you get from it, if you're good and you do a good job, plus the testimonials. So that, again, right there is unquantifiable, but we'll just stick with the $20,000 of revenue that you get. And then you divide the $1,000 that you save by not using my service. So your opportunity cost is $20 per every dollar that you would have earned. That's a huge opportunity cost. That right there shows in tangible numbers that not outsourcing your accounting is a bad business decision. And if you do it just in dollars, your return on the best plan, which is getting that project, $20,000, minus the chosen plan of saving the $1,000, your opportunity cost is $19,000. So you're throwing money away by doing your accounting on your own. And again, some business owners are more inclined toward accounting. A lot, if they're not an actual accountant, really are not inclined towards it. So that opportunity cost is going to go up if you're don't know what you're doing, or if you have an idea but you're not really sure, the less experienced you are, the more that opportunity cost goes up. And that again is in black and white. That's not really a viable option. And you should be doing this with any project. I'm just being the accountant and outsourced accountant at that. I'm using this as an example, but that should be the opportunity cost should be used for any business decision that you make, because you want to see what the revenues are going to be and what the cost is, so that you come up and pick the best option for your company. And again, there's explicit costs, which is the out-of-pocket costs that could have been used for something else. But then you also have implicit costs, which is less tangible, and it takes into account the value that could have been generated by another alternative. So, and again, the outsourced accounting for me is a big one, and that's the example I use was just monetary. In the first episode, we talked about time, so that's also you don't have to necessarily go out and prospect. You could satisfaction is also a consideration, so you could be with your family and doing other fun items, make your life better and more enjoyable, rather than sitting back and doing accounting that you probably hate doing, so if it's not your core function within your company. So again, it's the ratio. Here's the question that you're asking: what do I sacrifice versus what do I gain? If you're sacrificing more than you gain, then it's not worth it. So it's what you sacrifice divided by what you gain equals your opportunity costs. And again, you're sacrificing $20,000 of project revenue. You're gaining $1,000 by not paying a nominal monthly fee. So 20,000 divided by the 1,000 again is $20 per every dollar. That's your opportunity cost. That's huge. So you must assess the relative risk of each option to come up with your best solution or alternative. And that, again, you don't see that necessarily on the, directly on the balance sheet or directly on the income statement, but it is there because you have your revenue from your business, and if you're missing out on $19,000, that's your opportunity costs. If you're missing out on $19,000 of net income and revenue for your business, well, then I guess you're doing awesome, because you don't need that money. So that's good. And so that again is a huge consideration when you're thinking about your time, because as we said in the first episode, time is a very valuable asset and resource because it's fixed. Everyone only has 24 hours in a day. So to waste your time doing something that you don't like or don't want to do, I mean, just that sentence right there makes it sound ridiculous. So you don't want to waste time to not get the best benefit by not being able to prospect and get a bigger project. Like we said, $20,000 in the example was strictly monetary. If you get referrals, so now you did a great job on this $20,000 project, and he refers you to someone or two or three or four people, and they each give you a project, and then testimonials, and you get projects on that. It's becoming the opportunity cost for not paying $1,000 for accounting payroll services is getting bigger and bigger and bigger, and it's just a bad decision not to outsource that. Another great example of opportunity costs is someone who's an entrepreneur and trying to start their own business, and it could go one of two ways in regards to revenue. Suppose they have a full-time job and they're starting their business as a side gig. What does it cost? Maybe they could get overtime if they didn't spend that extra time trying to build their business. So if so, what is it costing them with a salary in order to try and build their business? Or on the flip side, if their main focus is their business, but they just don't have enough clients yet, so they have a part-time job in order to make ends meet, being at the part-time job is taken away from time that they could build the business. So what is the cost of that entrepreneur being at a part-time job rather than focusing solely on the business? So again, there's opportunity costs there in everything that we do in life. But in that case, would it be more productive for the entrepreneur to just work on the business? Because if they get one project, that'll probably be worth a couple weeks of part-time income. Or do they still, are they nervous, and do they need the guarantee of income coming in from the part-time job? So that is the opportunity cost there. Again, money versus time and potential prospects and building your business and brand. So there's a lot of options and scenarios, and it's part of every business decision and decision in life in general, the opportunity costs of picking one alternative as opposed to another. So with that, that's going to be it. That is really one of my favorite accounting subjects, is the opportunity cost. It's what is involved. The dilemma of every business owner is what can I do versus what shouldn't I do? Is it really worth it to do this project? And it's all opportunity cost, which is the economics in a nutshell. It's the economics of time, the resources that you have, how much are you going to get versus how much it's going to cost you. So opportunity cost, again, the loss of potential gain by selecting one alternative over another alternative. So you want to pick the option, of course, that gives you the most economic profit. And with that, I will end this episode 5 on opportunity costs. I was going to speak about sunk costs, but I just like opportunity costs so much that I wanted it to be a standalone episode. And until next time, lead with love. Have a great day.